Hello and welcome back. You are listening to another episode of The Mark Moss Show, where we talk about the decentralized revolution each and every week. Of course, we're talking about the way the world is changing right before our very eyes. And we always look at it through the lens of politics, finance, and technology so we can get better context to what is going on in the world today. Of course, the technology that we're talking about is Bitcoin. We're talking about the decentralized technology that's ushering in this new world. And I try to bring to you some education to help you see things differently, understand things at a deeper level, try to bring some of the latest breaking news so you're up to date and you know exactly what's going on. And of course, some interesting guests. You can hear some different opinions and some different perspectives. And right now I want to cover some of the latest breaking news that we saw this week because it was a busy week. There was all kinds of things going on, so I got a lot to go through. We're going to talk about what's going on with the markets, what's going on with prices. We're going to talk about these new bills that the government put through that have the opposite name of what they're going to do. We're going to talk about some crazy new things we saw out of one of the biggest, actually the new biggest government agency. We'll talk about Bitcoin. We're going to talk about some big news that happened with Bitcoin, how it's transforming before our very eyes. And then we'll talk about some big attacks that are happening globally and in the United States against cryptocurrencies and Bitcoin. So I got a lot to cover, a lot to go through. So let's jump into it. So big news this week was, of course, all eyes on the Federal Reserve. What are they going to do with the money? Are they going to make it cheaper? Are they going to make it more expensive? We've talked a lot about price fixing and the damages that does and how the Fed really, by setting the price of money, sets the prices of everything. If you've missed any of those conversations, no worries. Just check it out on the podcast. Again, just search Mark Moss Podcast. But what we've seen is that this week the Fed came out and they've been waiting to see the data. Of course, they're now on this what they call data-dependent model. All eyes are on the inflation number, CPI, consumer price inflation. And guess what? Congratulations. Crack open the champagne bottle. We got inflation to go down. Hooray, 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 hooray. We went from 9.1 all the way down to 8.5. It was amazing. It was glorious, and everybody was so excited. Now, I do want to just keep in mind for you here a second that inflation going from 9.1 to 8.5 doesn't really mean much. It doesn't mean that these crazy high prices that you're paying everywhere are coming back down. What it means is that they're still going up, just at a little bit of a slower pace. That's what it means. So instead of going up at 9.1%, they're still going up, but now at 8.5%. So also bring your attention, if you can remember, all the way back to a couple of months ago. I know attention spans are short these days, but if you can remember all the way back to a couple of months ago, when inflation was 8.5 as well, and it was horrible. It was like, oh my gosh, people were freaking out. The Federal Reserve was freaking out. I can't believe it's so high. We got to do something. But then it went higher, and now everybody's happy that it's back down to 8.5%. So I just want to keep that into perspective for a minute because that has a lot to do with, it's the bigger picture overall. Because just because we're getting a little bit of relief, everybody's happy, but we're getting a little bit of relief from like crazy astronomical levels. So, of course, when you drive it up so far and then it comes back down, like you feel good about it, but it came down a little bit from a crazy high number. Let's see where we're at here. I was trying to zoom in on my chart. Yeah, so we leveled it off a little bit here. So it's been a couple of months since we've been down at this level, and it was crazy high, and now it's come down. So hooray, right? And so anyway, that was good news for the markets. We saw 8.5% there, which beat their estimates. Now, there's a couple problems with this. Well, before I jump into the problems, let's talk about it. So, a couple things. They had forecasts that it was going to drop from 9.1 to 8.7%, and it actually dropped more than they had forecast. So that's good. Whenever you beat your forecast, that's typically good. So hooray, everybody's happy, tapping themselves on the back. Good job, right? Now, why did they go down, and is that true? Well, the biggest drop was energy, or really your gasoline prices. So let's see, gas prices went to like I mean, in Southern California, where they went from like $3 to $7, and now they're back down to $5. And everyone's all excited. Hooray! They dropped from 7 to 5. That's amazing. Yeah, but they were 3 just not that long ago. So keep that in mind a little bit. But that supposedly dropped it down. But at the same time, per rent.com, their study with rents updated as of July 15th, year over year change in rents was 26%. Now, some states went up by 100%, some cities, I should say. Some cities went down, but average nationally was up over 26%. And the reason why that's important is that the rent or the shelter category makes up about 25% of the basket. So how did the CPI basket come down with gas going down when shelter still went up by that astronomical amount? Well, they don't report that it went up by 26%. Of course, that data comes from rent.com. Per the government, it only went up by 5%. So I don't know where they're getting that data. On top of that, we have food went up by 10%. So again, much higher than what they reported. But again, whatever, congratulations, it all came down. Now, what does that mean? Well, we saw the markets rally, right? So Bitcoin and Ethereum have been on a tear ever since. Bitcoin's breached 24,000. It seems to be holding that pretty convincingly. It's something I've been talking about for quite a while. How we saw. I kind of started calling the bottom around 17,000, 18,000. I was kind of predicting the bottom. I put out a video on my YouTube channel. If you're not following me on YouTube, you should just search Mark Moss on YouTube. And I said, anything under 20,000 is historic buying opportunity. And then I put out a video saying I think this is finally the bottom because we'd seen capitulation, things like that. And it looks like maybe that is. We're holding 24,000 pretty convincingly. Looks pretty good. But we're not out of the woods just yet. Like I said, things are still bad. Back to the rent situation for a minute, we can see there was an article that came out this week on Bloomberg that says the snowballing U.S. rental crisis is sparing nowhere and no one. They said that rents are going up the fastest pace than more than 30 years. Rents are going up faster than they have in 30 years, which is a pretty big deal. Now, rents go up lagging, right? So people sign multi-year leases, 1-2-year leases. And so not until that lease comes up do we see that price of that rent go up. So we're probably going to continue to see this going up for some time. On top of that, what it says in this article is that renters are staying in their households for longer. And so they're not moving as much, which means the occupancy rate stays very high. Occupancy rate high means there's not any inventory. Occupancy rate low means there's lots of inventory available. And what we're seeing is that a lot of people, especially with the real estate market slowing down, they don't want to sell their homes. They're staying in them. And so there's a lot of people renting. And we can see here that the renters are staying put. The occupancy rates are just down a little bit, but they're still the highest they've been in over 20 years. So we see about 97% occupancy rate. Now, 100% means there's nothing available, nothing, right? So we're at 97% occupancy rate, the highest we've been in over 20 years, which is a pretty big deal. And so we're going to continue to see these numbers moving higher and higher. And we'll see the costs of things going up. So good news, food prices are up, rent's up, but CPI is down, and Bitcoin's responding. I think Bitcoin is going to transform from this risk-on asset it's been known for to be a risk-off asset. I think Bitcoin could continue to go up. And I'll continue to tell you what I've been telling you since Bitcoin was at $1,000 in 2017, that it's always a good time to buy Bitcoin. Of course, we look at it through the lens of those other things. And one of the things that we look at is obviously just money, right? We want to look at money. Bitcoin is disrupting money as we know it. And we were talking about in the previous segment about inflation rate, the amount, the increase of prices, how fast these prices are going up, the inflation rate. And how, hooray, they magically came down. Everybody's excited. I think it's a little bit too early to be congratulating ourselves. Remember, prices aren't coming down. Just the rate of change has slowed down a little bit. But the government has rammed through another package down our throats. We didn't want it, but never mind. They got it. And they always name it something cute and cuddly, something that nobody could be against, something that everybody wants. It usually typically turns out to be the opposite. This one is called the Inflation Reduction Act, which is kind of like, I I don't know if it's meant to troll us or what, right? But it's like all this talk about all this money, all this stimulus the government spent in the last 2 years and how it's created all this inflation. And of course, it was like we didn't cause the inflation. It wasn't the spending. It was the government, or it's Putin's fault, Putin's price hike, all these things. Finally, they said, okay, fine. Like, it was our money printing that caused the inflation. Okay, fine. So we've seen the head of the IMF, Christina Georgina, come out and say that. We've seen head of the ECB, Christine Lagarde, come out and say it. Even Jay Powell. They've all come out and agreed that it was the massive amounts of money printing that caused the inflation. So now they're going to print even more money, and they're going to call it the Inflation Reduction Act, which is just insane. And like I said, that's why I say it's almost like they're trolling us. And they do it so that they could get most people to think it's okay. It's kind of like naming something like the, Save the Puppies Act. Like who could vote against something like the Save the Puppies Act? And if you were against that, if you voted against that, you would be a monster, right? You're a monster. How could you be against something like the Save the Puppies Act? Or you don't like the prices going up, do you? I mean, you got to vote for the Inflation Reduction Act, right? Well, but does it give us that? And that's what we're talking about. So we see that the White House, Biden's White House, stands by Inflation Reduction Act after the CBO. What's the CBO? The Congressional Budget Office. They're the one that sets the budget for the government. They're the ones that set what the deficits will be. Somebody that we should probably be listening to more than like a political party who might have a vested interest in the answer. So the Biden's administration stands by their Inflation Reduction Act promise, even though the CBO, Congressional Budget Office, warns that inflation won't drop as a result. Surprise, surprise. The White House is defending the Inflation Reduction Act against a report from the nonpartisan. Well, they must be extreme right wing if they're saying something other than the left wing, right? It says that they're a nonpartisan congressional budget office that suggests that the legislation will not meaningfully lower inflation in the coming years. Who would have thought all this money printing created inflation, and if we print even more money, it won't help inflation? It doesn't take a genius to figure that out, does it? They said, I love this part. So a question was asked to the White House press secretary. Of course, I'm talking about Karine Jean-Pierre. Could you address the new CBO analysis about the Inflation Reduction Act that says it would have almost no impact or a negligible impact on inflation in 2022 and 2023? She responded, quote, leading economists have said that this Inflation Reduction Act that's been analyzed by them, that's been looked at by these economists, will indeed reduce inflation. Okay, that's good to know. Leading economists. Do you want to tell us who they are? Do they want to put their name on this? We can find anybody, pay them enough money to say whatever we want, but the CBO says it won't. But, she says leading economists, they've looked at it, and they say it will. Jean-Pierre was then asked if her answer means she is, quote, dismissing the CBO report. So are you saying then? So you're saying that your economists who you don't name and we don't know, but you're saying that they're right and then the CBO is wrong? Is that what you're trying to say? And she was asked whether is it fair to call the legislation the Inflation Reduction Act when the CBO says that inflation will not be reduced? She said, quote, well, if you think about the Inflation Reduction Act, it will have an effect. Also on drug costs, she explained. Lowering prices on pharmaceutical costs, which is going to make a difference in a big way to seniors and to families. Okay, so let's see. They're going to reduce pharmaceutical costs, so that's going to bring down the expenses of goods. Now, I didn't look it up ahead of time, but I don't think prescription costs make up a big chunk of the CPI basket. People didn't used to typically buy pharmaceuticals your whole life. So typically the way CPI is supposed to work is 50 years ago, I went to the grocery store and I bought a T-bone steak and a gallon of milk and a pound of cheese. And then I continue to buy that over time. What happens with that price? We shouldn't be buying pharmaceuticals for 40 years. That's a different story. Anyway, so the Reduction Act is going to lower drug prices. Well, that sounds great. I mean, they're way too high. Why is it that insulin is like whatever several $100s here and it's like $6 in other countries? I'm actually having surgery this week on my hip, and I could go to Colombia and the surgery would be $6,000, and it's costing my insurance $81,000 here in the United States. Now, Colombia has one of the best medical tourism locations, some of the best hospitals in the world, American-trained doctors. People go there for everything. I can get it for $6,000, and it's $81,000 here in the United States. So they're going to lower pharmaceutical costs. Great. Why are they so stupid high in the first place? And how are they doing that? Oh, that's right. They're going to subsidize them. They're going to pay for some of that so you don't have to pay for it. So who's going to pay for it? Where's that money come from? You see what I'm saying? It's coming from money printing and from taking tax dollars from you. That's where it's going from. It's not reducing inflation. Maybe for those couple of people it helps them, but not for big people overall. And what else are they using that money for? Oh, surprise, surprise. Remember, the rest of that money comes from your tax dollars. So on top of that, now the U.S. government wants to use your tax dollars to hire 80,000 new IRS agents to go after and enforce you. And they've even authorized them to kill you if you don't pay up, period. 80,000 IRS agents are authorized to kill you if you don't pay up. In the terms of the IRS thing, it says here, they are able to use of deadly force is permitted if, in the opinion, either the special agent or another person is in imminent danger. Deadly force may be used to prevent the escape of a fleeing subject. Prevent the escape of a fleeing subject. Can you believe that's what it says? So they're going to hire 80,000 new agents to go squeeze you at the threat of a gun to cough up money so you can pay for some of the pharmaceutical costs. So some people's costs will go down for the Inflation Reduction Act. But that's not even the start of it. On about an 80-year time frame, the financial system gets reset every 80 years. 80 years ago, the entire global system was reset, the Bretton Woods Agreement. And that's what we're witnessing right now. So one system is dying and another one is being rebuilt. You can think it's right wing or left wing, or you can think it's right or it's wrong. It doesn't matter. It's happening. It's not political. It's just happening. We live in a fake fiat monetary system that was doomed to fail from the beginning, and it's failing, and it's falling apart, and we have a bunch of leaders who are trying to cobble it together and hold it together with some duct tape and some chewing gum, but it's not working. And there's a new system being built to replace it, and we're witnessing both of these things happening in real time. And that's what we talk about each and every week. We're talking about one system as it's falling apart, and another system as it's being birthed. One man dies, a child is born. That's basically what's happening here. Now, back to the system that we have, of course, our monetary system is falling apart. That leads to all types of societal problems. I talk about this all the time. Because we're in a system that continually needs the government to print more money, we're in a Ponzi, and Ponzi's need new money coming in all the time. And so that's why they had to pass this new thing called the Inflation Reduction Act. I was talking about how even though all these other stimulus packages they've passed has created all this massive inflation, and they've all admitted it by now, the head of the IMF, ECB, the Fed, they've all admitted it, but yet here we are passing another one because, of course, we need the money. And they had the audacity to name it the Inflation Reduction Act, which is the exact opposite of what it's going to do. I mean, you just can't make this stuff up. Now, on top of taking all that money, well, they're gonna lower drug costs, pharmaceutical costs, by making you pay more money for taxes. Well, if you pay taxes, I don't have the exact breakdown in front of me right now, but I believe the top 25% of taxpayers pay 98% of the tax. So that means 75% of the people in the United States pay less than 2% of all the tax receipts. So I guess it's not coming out of all of your money, but for a lot of you, the IRS needs to make up that gap. How are we going to get that money? We need to collect more money. We need to go out and harass more people. Now, before we had the monetary system that we have today, a fiat money system where the government could just create money out of thin air, we were on a gold system. And gold was money for 5,000 years. So The first central bank was created, the Bank of England, in the late 1600s. I forget the exact year off the top of my head, like 1680-ish, somewhere around there, 1670, I forget exactly. The Bank of England. Before that, we were on the gold standard. And so just rewind to 1600 or 1500 or 1400 or whatever period you want. Let's go back to the story of Robin Hood. You remember the story of Robin Hood? Robin Hood would steal from the rich and he would give to the poor. I have kids. I watch the cartoons with the fox and the bear with my kids. And really what he would steal from is he'd steal from the king, right? Now, where did the king get the gold? He took it from the people. And when the king needed more money to go to war, what would he do? He would go out to the people and he'd squeeze them even harder. And needed more money. He would send his army out to house by house by house. They had ransacked their house. Anything of value they'd grab. Their pots, their pans, their jewelry, anything they could grab, they would grab because they needed money for war. That's like the IRS. So that's exactly what the IRS is. So the end of the empire is here. The end of the money system is here. The government needs more money to pay for some people's prescription drug costs so they could fight inflation, supposedly. And they need to squeeze more money out of you. Well, how do they do that? Well, they're going to hire 80,000 new agents, which makes them the biggest private army in the United States, working directly for the President of the United States. Bigger than the Secretary of State, bigger than the FBI, bigger than the Border Patrol, all combined. They're coming after you. You have more than $600 in your account. You did a Venmo transaction. They want to shine a flashlight up your butt. Never mind the trillions of dollars that get laundered through the banks. Never mind the billions of dollars that have just got laundered through the Ukraine situation. Never mind that. You got $600 in your Venmo account. We better shine a flashlight up your butt and see what happened. 80,000 new agents are coming at you, and they are armed to the teeth. Armed to the teeth. As a matter of fact, in the latest job listing of the IRS, it says right here, I'm going to read it directly because I'm going to read it word for word because you're going to think I'm a nut job if I don't. It says, quote, major duties. Adhere to the highest standards of conduct, especially maintaining honest integrity. Great. Work a minimum of 50 hours per week, which may include irregular hours. Okay, great. Maintain a level of fitness necessary to effectively respond to life-threatening situations on the job. Since when was an IRS agent a life-threatening situation? Aren't you just going like you're a bean counter? Like, aren't you supposed to just go and, like, look at somebody's profit and loss statement or, like, look at their W-2? Like, since when is looking at somebody's W-2 a life-threatening situation on the job? What exactly are they training these IRS agents for? Like, what? Let's keep going. Major duties. Carry a firearm and be willing to use deadly force if necessary. Wait a minute. Wait, what? IRS agents? I thought they're supposed to look at my taxes and did I pay enough? Did I get enough of a rebate? But wait, now they have to respond to life-threatening situations, carry a firearm, and they have to be willing to use deadly force? Like what? Hang on a second. What kind of force are they trying to build here? And this is insane. And as I said before, if you go to the website, so it says there, major duties must be willing to use deadly force. So if you go to the website and you look up section 9.2.3.5.2, it says when deadly force may be used, which I read to you. Deadly force is permitted if, in the opinion, either the special agent or another person is in imminent danger. But. Imminent has a broader meaning than immediate. I'm reading word for word here. Imminent has a broader meaning than just immediate. A subject may pose an imminent danger even if she is not, at that moment, pointing a weapon at the agent. So I could say, I'm in imminent danger even though you don't even have a weapon. And it says, I read this part earlier, deadly force may be used to prevent the escape of a fleeing subject. Now, I thought in the United States I was innocent until proven guilty. Isn't there something called due process? Don't I have to be arrested? Don't they have to build a case? Don't I have the opportunity to defend myself? Don't I have to be found guilty? I thought I was innocent until proven guilty, but they're saying that they could use deadly force used to prevent someone who's running away. That's the opposite of imminent danger. Someone's running away from you. You're going to kill them? That's the 80,000 people they're hiring. Now, on top of that, on top of that, in 2022, so we're halfway through this year, the IRS has spent almost $1 million in ammunition. 1 million. They've spent $11 million over the last 10 years. And the IRS is sitting on over 5 million rounds of ammo. What are they doing? What do they need that for? Well, remember the Robin Hood story? They had to go house by house by house to get whatever gold they could. Who's going to pay for those? Right? Who's going to pay to bring those pharmaceutical costs down? Why are they hiring 80,000 IRS agents? Why are they sitting on 5 million rounds of ammo? Why do those IRS agents have to be they're able to, they must be willing to use deadly force, even on a fleeing subject, not a guilty person. It's insane. Again, one child, one person, one old man dying, child being born. That's the system that's dying. I'm going to be back in a minute talking about the system that's being born. We have big news. The biggest entrant in the space came in this week into the brand new system. We're talking about Bitcoin and some big news that happened this week. You're listening to the Mark Moss Show, talking about the decentralized revolution. And something that we've been talking about for years, I've been talking about for years, is the entrance of new market participants, namely the institutions. When we talk about the institutions, we're talking about the giant hedge funds, the pension funds, right? Wall Street, the big money. No matter how much money you have listening, you're most likely considered, just like me, we're considered the dumb money. The smart money is the institutions, the ones with, billions, hundreds of billions of dollars. And so we've been waiting, and we've been getting them little by little. They're coming, slowly but surely. But we saw the biggest one in the space jump in, which is a big deal. And I talked about this a little bit last week. So if you tune in each and every week, you heard a little bit about it. And if you don't tune in each and every week, then what are you doing? Grab your phone, put a reminder, join me each and every week on this time, on this channel, this location. And if you missed anything I had to say, don't worry, I got your back. You can check it out on the podcast. Just search Mark Moss Podcast or find me on YouTube. You can find it there as well. And while you're at it, follow me on social media, just at @1MarkMoss. That's at the number 1 Mark Moss. And I would love it if you sent me a message and let me know you're listening. All right. So 1 week after announcing a partnership, the largest asset manager in the world, let me say that again, the largest asset manager in the world, $10 trillion. I'm talking about the big, bad, all-powerful, and evil BlackRock. And evil. They take all your money and then they run the world with it. Most of the things they do socially, I'm not a big fan of, like buying up all the single family homes across America and driving the prices up so most people can't afford a home. I'm not typically for things like that. I'm not typically for mandating, people get their energy cut off and then they die of freezing cold. I'm not typically for those types of things. But anyway, BlackRock, $10 trillion, they announced last week. We talked about it. That they are doing a partnership with Coinbase to bring Bitcoin to their institutional investors. Now, they're not bringing crypto. They're bringing Bitcoin. It's a big key, all right? Not bringing crypto, they're bringing Bitcoin. And now, I get it. There's a lot of people that love cryptocurrency, and that's fine. And you want to buy cryptocurrency, that's fine. But BlackRock is bringing Bitcoin. So I'm very clear. I always try to say Bitcoin, not crypto. 1 week after announcing a partnership with crypto exchange Coinbase, BlackRock, the world's largest asset manager, has launched a spot Bitcoin private trust for U.S.-based institutional investors. This will offer direct exposure to Bitcoin and track the performance of the largest cryptocurrency by market value. And it says, despite the steep downturn in the digital asset market, we are still seeing substantial interest from some institutional clients in how to efficiently and cost-effectively access these assets using our technology and product capabilities. So it was last week BlackRock and Coinbase announced that mutual institutional customers would have access to these assets through BlackRock. So we're talking $10 trillion. I mean, right now the market cap for Bitcoin is somewhere in the range of half of 1 trillion. So let's say that there's 10 trillion. Let's say that they get 1% of that or 10% of that. I mean, we're talking a serious number. We could see now, The market cap of Bitcoin is about $500 billion. That's the valuation. That doesn't mean how much money is in. So we could see, for example, like 100 billion come into the Bitcoin ecosystem of actual dollars, like $100 billion come in, but it could drive the value up 10 times that. So we could see $1 trillion added to the market valuation with only a little bit in. Think of it like real estate, for example, right? So let's say that homes are priced based off of comparable sales, so whatever the other home sold for. So let's say that we're in a cul-de-sac, they're all tract homes, they're all identical homes, they're all at $100,000 for easy numbers. I come in and I buy a home for $150,000, right? Now, all those other homes that are identical, they're all worth $150,000 now. Well, how much did I put down on that house? So I bought it for $150,000. Let's say I put 10% down. So I put $15,000 down, but the 10 other homes went up by $50,000 each. So that means that $500,000 of valuation was added by me putting $15,000 into the market. So I put $15,000 in, $500,000 valuation was added. So that's kind of how it works. So they could put in, a few $1 billion and get $1 trillion worth of valuation off of that. So when we have BlackRock, $10 trillion, could we get a few billion, a few $100 billion? And the answer is, I think we certainly could. Another big piece that I saw this week is that Bitcoin has been trading like a risk-on asset. We've been seeing it trade, pretty lockstep with the NASDAQ, which are the tech stocks, the risk stocks. And it has been trading like that. But I say that Bitcoin has been trading like a tech stock, but it's not a tech stock. So it has been, but that's not what it is. And it's been a 90% correlation. It's been coming down. It's a little bit below 90 now. And so 90% of the time or 80% of the time, it is correlated with the NASDAQ. But the 10 or 20% of the time when it's not correlated is when it has all the big moves. But again, it's not a tech stock. We know that. I know that. I think you know that. That's our edge. But we are seeing more people come around to that. And so this week we saw Mike McGlone, a senior commodity strategist at Bloomberg. Pretty good credentials there. He says that Bitcoin is likely to transition from a risk-on to a risk-off asset in the second half of 2022, this year, as the macroeconomic environment is rapidly shifting towards a recession. He says that I see it transitioning to be more of a risk-off asset like bonds and gold than a risk-on asset like a stock market. So what does that mean? So that means that Bitcoin could do really, really good in a risk-on environment, which is an inflationary environment where stocks are going up. Or it could also do good in a risk-off environment where the market's going down like gold and bonds would do. Now, I'll let you read between the lines, but it sounds like to me, Mr. Mike McGlone, commodity expert from Bloomberg, is saying that Bitcoin is going to do good. It's going to do good in a risk-on environment. It's going to do good in a risk-off environment. And either way, it's going to do good. So I like that. And I would agree. Again, I know that Bitcoin is not a tech stock. It trades like that, but that's our edge. The market hasn't really woken up to that right now. But again, that's the new system being born, but we still have the old system that's hanging on and doesn't want to just die yet. And as a matter of fact, an interesting point I saw here was the 2 U.S. senators, of course, our 2 most communist socialist senators that we have. I'm talking about good old Bernie Sanders, who, of course, I'm not putting words in his mouth, ran on being a socialist. That's his platform he ran on, and Elizabeth Warren. They asked key bank regulators to rescind their crypto guidance. Lawmakers asked a series of banks who are involved in crypto. So they want to rescind. Hey, we know that we told you it was okay to be involved in crypto, but we rescind that now. We want to reject what we said. We want to go back on what we said. And it's the new comptroller of the currency, Michael Hsu. They're asking him to rescind it from what the previous comptroller, Brian Brooks, had done. So all these banks that are making money, providing crypto custody services, issuing payments, stable coins, all that, nope, that all needs to be taken back. Because of, the risks that we have. We have to protect everything. Now, I'm just going to let you know there's 10 points in Karl Marx's book, The Communist Manifesto, 10 points of how to install communism. Point number 5 is control all means of credit and money creation. So Of course, under communism, they can't allow anybody else to control the money, but that system is dying. You're listening to The Mark Moss Show. We're talking about the decentralized revolution. One system dying, one system being born. It's exciting. It's an exciting time to be alive. Hopefully you enjoyed those news stories that we got this week. Check it out on the podcast, Mark Moss Podcast. And that's what I got for you today. Thanks so much for listening. Since you've stayed to the end, I know you like this video, which means you're probably going to really like this video right here and this video right here.